Hey everybody, welcome back to Pathways to Wealth. This interview is awesome. I don't know any other way to say it. Garrett Gunderson is the founder of Wealth Factory. He's also a New York Times bestselling author and just an all-around really smart guy. One thing I didn't know before this interview is Garrett and I actually both got our start in business the exact same way. We both started car detailing companies when we were in high school and then went into the financial space. So I think this is really interesting. Garrett talks about and has helped thousands and thousands of high-level entrepreneurs and investors get a hold of their finances and build like a bulletproof financial plan. He talks about and has a really good definition for what true wealth means to him. He also talks about several ways that you can actually increase your cash flow in your business today. There's all these little hacks that he's figured out, from taxes to I'm not even going to go into it. You'll hear it in the interview, but it's really impressive. And these are things that can save and earn you thousands of dollars a month extra if you own a business or if you're an entrepreneur. So without further ado, I'm excited to introduce Garrett Gunderson. All right. Hey, everybody. Welcome back to Pathways to Wealth. We have another great interview today with Garrett Gunderson, who's the founder of the Wealth Factory. He's also a New York Times bestselling author. He's on CNBC, Fox, ABC. And just a all-around really interesting guy. Garrett, how you doing?
I'm doing well, Chris. How you doing, man?
I'm great. Thanks for being here, man. I feel like your message and what you guys do is really in line with kind of my message with the show and everything that I'm about. So I'm excited to have you here.
Great.
So tell me a little bit, I kind of gave you, the standard intro. You're founder of Wealth Factory. You're a New York Times bestselling author. What else should everybody know about you?
I started in the financial services business in 1998 because back when I was 15 years old, I had a car detailing business, won $5,000 for being the young entrepreneur of the year. And unlike most kids, I wanted to invest that money. And by wanting to invest that money, my mom would never sign off as a custodian. So when I finally turned 18, I got a bunch of, low-tier financial firms that were interested in me, people that were peddling products, saying that the stock market was going to earn 18% because it was the 90s and all that kind of stuff. And so in that interview process, I got offered an internship. And so at first I did very different than what I would do today. I peddled mutual funds for a couple of years, and I even sold some life insurance because I wanted to be called a financial planner. And that's what most financial planning firms are about, people peddling life insurance or mutual funds. But then when the market started to go down in 2000 and a lot of my family and friends and the parents of my friends were clients, I didn't want to give them the same old crap everyone else was saying, that they were in it for the long haul or buy because the market's on sale and all that kind of nonsense that I think dollar cost averaging, all that stuff that I think doesn't really provide long sustainable wealth and definitely doesn't emphasize cash flow. And that was really the beginning of my career. And is once we discovered that, and then I turned that into an Inc. 500 firm. And I'm in the process of writing 4 books right now, one called Budgeting Sucks, another one called What Would the Rockefellers Do? So I'm really about how do people create economic independence in a short period of time, because you don't need to wait 30 years for compound interest to get you there. You can have assets that produce cash flow and get there within 3 to 7 years.
Okay, so a few things that you just said really took me back. One, we both started a detailing company when we were teenagers. I had no clue about that you had that same experience. That was kind of my experience too. I started a detailing company when I was 16 and then went into financial services on the lending side. So you went into the mutual fund side. That's so funny, man.
Yeah, I was a mortgage broker at one time during the process too, man, because I was making money there. Yeah.
Nice. So you're writing 4 books. That's insane to me because I just wrote my first book and I wanted to kill myself through the process. So you must be naturally gifted at that.
No, man, because the first book, Killing Sacred Cows, I tinkered with it for 2 years and finally brought in a co-author to really create more structure and accountability. And so I wasn't dealing from blank pages. We'd have conversations, he'd write, then I would expand on the writing, and that worked really well. And then I took a bit of a hiatus because doing the first book, getting it to New York Times, doing media promotions, and even leaving my business for months at a time, My business wasn't really ready for it. And then we had all the chaos and the economy change in 2008, which provided a lot of fear for the general marketplace. It was just taxing. So I was like, dude, I don't know if I want to do that again. And now here I am, I have a book that's a limited print run called What Would the Rockefellers Do? Very specific on how you can start to rig the game in your favor, cut out the bank as a middleman, and then start to create a kind of sustainable, lifelong wealth formula that leads to generational wealth and also becomes a way to have a family bank where your family always earns the interest rather than institutions. So kind of a cool book, but budgeting sucks. My plan is to make that much bigger than killing sacred cows, because it's really a completely different formula than what most of the financial pundits are teaching. Budgeting is a constraining mindset, and no one shrinks their way to wealth. So if people get thinking about budgeting and use their energy and thought process towards that, they miss out on opportunity. And sure, there's 3 ways to live within your means. You can live within your means by budgeting, but that's the least effective way for an entrepreneur or an investor. More effectively is to be more efficient within your means, which means save on taxes, save on interest, save on investment fees, and save on insurance costs through financial intelligence. Or the best thing to do is expand your means, which means produce more and create more value, and it's going to lead to a whole lot more money. And that's really what the wealthiest people do. They don't get there by pinching pennies. They get there by reaching a ton of people.
Right. Focusing on the things that matter, not, saving $2 on a Starbucks coffee, right? You're not going to be a millionaire by cutting out coffee.
Right. I mean, like if, this whole cutting out coffee type of concept, one is coffee's a pretty damn addictive thing. 2 is a lot of people go have coffee with the relationships that they do business with. And 3 is if you just enjoy it, why give that up? I don't think there's a single multimillionaire or billionaire that we could interview and say, did you get here because you cut out coffee? I mean, it's almost laughable, but that's middle class advice to help middle class people continue to stay ahead and stay on track, but never get where they truly want to be. And most books out there are really around middle class advice, but it's this simple. If you want to be wealthy, you have to own a business, or you have to be in a business that gives you upside potential. Anything outside of that, the stock market's never going to get you there. And so that's why I like other types of investing where people can treat it as a business, right? Like I know people that have made their entire career on real estate investing, and that's their business. And by the way, they usually kick the butt of the part-time investors because they can have a more robust organization. They have a lot of knowledge around it, So anyway, without going too much on the deep end there.
So tell me a little bit about Wealth Factory. What is that? What do you guys do?
We're personal finance for entrepreneurs, and our objective is to get 1 million entrepreneurs to economic independence by the time I die. So what that means is they have enough investment income or entrepreneurial income that doesn't require their daily involvement to cover all their expenses. So we're absolutely expert in people getting their financial house in order. We have something called an accredited network where we have attorneys, accountants, investment advisors, cash flow specialists, every type of insurance professional. I modeled it after a family services firm. So when someone's worth 50 million or more, they can walk in, be at a conference room table with all those professionals sitting around it and get great advice. The rest of the world, especially entrepreneurs that invest all their money back in their business, if they follow the advice of the middle class around their finances, they'll get devastated, and they're gonna have exposure. They're gonna have things working together. So I wanted to come in there and say, I'm not after the people worth 50 million or more because they get good advice. I'm after the small business owner that's making a good income, but could really use the financial support and structure to transfer risk, find money, and keep more of the money they make without having to cut back. Know that it's important to invest back in the business, into the right people, processes, and the technological infrastructure. And that it's not about, high risk equals high return by putting money into investments they don't know. It's about discovering their investor DNA. So we are a comprehensive personal financial services firm, finding money for entrepreneurs and helping them, achieve economic independence with a great team to support them.
I love that idea because there's so many entrepreneurs that are good at what they do. They're good at their business, but they suck when it comes to managing your own finances, right?
Right.
What would you say is like the biggest challenge that entrepreneurs or small business owners run into when it comes to growing or managing their wealth?
Well, look, as a business owner, it takes up a ton of time running a business. There's fires to put out, there's a vision to have, there's relationships to build, there's just so much to do that even if they know they need to handle the personal financial side, their car insurance, homeowners liability, disability, medical, life insurance, their business owner policies, their corporate structure, their estate plan, their credit score, their loan structures. I mean, that kind of stuff becomes overwhelming. And if they try to do it, most financial professionals don't agree. They have their own philosophies. So it's hard enough to hire the right people for your organization, let alone go hire the same caliber or the highest caliber financial people out there, because most of these firms are product peddlers and trying to get them to think about retirement planning rather than thinking and understanding who they are as business owners. So that to-do list gets big simply because of a constraint of time and a constraint of the right people supporting them in what they do. And that's where we saw this huge opportunity in this massive niche, because that's what we're best at, is being results-based and implementation-based. And we're not money managers trying to confiscate their money and put it into some crappy retirement plan that they have to relinquish control forever, have government 100% control it, have a whole bunch of unknown fees associated with it. Instead, we were about, let's help them improve cash flow. Let's charge a tuition that's results-based, so that it's really about having that access to individuals to turn those huge to-do lists and do a lot of the heavy lifting so that they get done, because we can bring the person in to get it implemented immediately.
Nice. So give me an example. You talked a little bit about cash flow. Like, how would you set that up? What do you focus on to make that happen?
Well, first we would look at, what is their biggest area of opportunity? 93% of business owners overpay on their taxes. That's immediate cash in their pocket if they save on taxes. And if it's the right strategy, that's going to happen year in and year out. So we find business owners that are not incorporated. That's a very simple way to get a better tax structure, is incorporate and how you pay yourself. Mm-hmm. When you take income in a salary form as a business owner, that's the highest amount of tax you'll pay. When you take income in a passive type of form, you'll have less taxes. So if you take salary plus dividends, those dividends don't get hit with self-employment tax. And so that could save you up to 15.3% on your taxes. If you've overpaid taxes in the last 3 years as a business owner, which about half of them do, as far as things that you can go back and get back, you can amend those returns and have the IRS write you a check. So every 3 years, we like to get a second set of eyes. Or we have entrepreneurs all the time that are hosting people over at their home, right? And saying, hey, why don't you come over? It's their clients, it's their vendors. Well, 14 days a year, they can rent that home out to their business, tax deduct it for the business, but don't have to claim personal income as long as that stays 14 days or less. Or a business owner can hire their kids if it's legitimate products and or projects, and that's $6,300 a year they could be paying their kids. That's tax-free to the kids. They write it off for the business. Or they own a commercial building and they didn't have an engineer come in. If you do something called cost segregation, now all of a sudden, rather than waiting 39 years to get all your tax deductions, you might start getting some of them in 3 years, 7 years, 10 years, and get double or triple the tax deductions. All that stuff starts to improve cash flow immediately and how they pay themselves. And anytime they move active to passive or ordinary income to capital gain or any of that kind of stuff, that's money right there in their pocket. And I don't believe in spending to save tax. It never makes sense to spend $1 to save 40 cents. Or I don't really believe in deferring tax, because I plan on being in a higher tax bracket in the future, because I always have been earning more money year by year. And I think the government's going to raise taxes. So we look at legitimate strategy. But the second area is if someone has loans. So if someone has loans, we want to make sure their credit score is over 780, because if it is, they could get better interest rates on their loans. And then we want them to address cash flow from a loan perspective. The way we do this is called the cash flow index. So we would take and say, take every loan you have, write down the balance, and divide that balance by the minimum monthly payment. It's going to spit out a number. If that number is below 50, you have a cash hog. You have a loan that's that's cash flow inefficient. It's requiring too high of a payment in relationship to that low balance. If you have a loan that's over 100 on that score, that's a pretty efficient loan. It means you get to keep control of your cash flow pretty well. And so never pay extra to more than one loan at a time if you're really trying to pay something off. You pay the minimum to every single loan and only attack the loan with the lowest cash flow index. That's going to help you pay that off faster. By paying that off, you can improve your credit score. By improving your credit score, you can renegotiate other interest rates. And then there's plenty of ways to game the system there. Maybe if they have a paid off car, refinancing a credit card with a car loan, lowering the interest rate, getting an installment loan, which helps your credit score, or finding any underperforming assets. There's a lot of people that usually have some old crappy IRA sitting around, or some money that they inherited, or something that happened that it's not part of the normal course of investing. If that's underperforming, they could cash that out and pay off higher interest rate loans, free up that cash flow, then use that cash flow to invest back in their investments or back into their business, or to pay off another low cash flow index loan. So that's another way that we manage cash flow. So those are two of like 20 ways that we really start to dive in and find cash flow for business owners. But in the world of finance, you were in financial services through the mortgage side, you just know that most financial advisors don't address 90% of the issues people have because there's no compensation for it. Because someone writes us a check to hire us, we address the things that put more cash in their pocket, and we're not worried about 30 years from today. We're worried about cash flow immediately, so we have a completely different philosophy.
Yeah, so you guys are basically attacking it from all angles, just looking for hacks that can save a little money here, a little money there. Well, and I guess
and the little money is the average cash flow improvement just on the loan side of someone that has more than one loan for us is $2,444 per month. And then on the taxes, it's $11,430 per $500,000 of revenue. That's all bottom line cash that they can spend however they want, not revenue that goes through the gauntlet of paying overhead and employees and taxes. This is just free cash in their pocket. Yep.
Yeah, that's great. So yeah, like you said, I mean, whenever you stack up, credit score, taxes, investment, debt, stuff like that. I mean, that can be significant 6-figure or more a year cash flow.
Totally.
So basically you guys are a full service, like financial firm where you have all of these advisors that, like usually is reserved for the super wealthy that now small business owners and entrepreneurs can have access to. Is that right?
That's exactly right. When I was 22 years old, I went to New York. I went into a family services firm. I saw what that was. I was like, I want to build this for the entrepreneur that has a good income, but doesn't have that huge net worth. And it took me about a decade. It was a lot bigger project than I anticipated because we created a 42-question application. We created a process with a 9-month minimum interview cycle. They have to be approved by everyone else in our network. They have to come to one of our 3-day workshops. They have to work on our stuff before they ever meet another client. And we have a 20-point philosophy. So 20 different points that if they don't subscribe to all 20 points, they don't even get in the door in the first place. So we make them read my book. We do all this stuff to jump through hoops. We just had an event last week where we had 2 people that they've already gone through the application process. They've flown in and done multiple interviews, and now they're on to that next stage. But yeah, man, that took a long time because I want all those people then communicating with one another, working together on behalf as advocates for the clients, rather than as adversaries or completely not communicating with one another and leaving the complexity up to the client, which is, once again, why business owners neglect this kind of stuff, because it's a huge pain in the ass. It feels overly complicated, but our job is to simplify it and make sure that it's emphasized on saving them a ton of time so they could focus on swinging for the fences in their business.
Nice. Well, how many, so you've got attorneys, accountants, financial planners.
Yep. And we don't really call them financial planners because we have in our own organization what we call financial architects, which are kind of like the quarterbacks or the navigators to design the entire plan. And then we have wealth engineers that say, hey, what is it that you truly want? What's important to you so that it applies to the individual? And then that's our internal team. Then the external team is the accredited network, where we have multiple types of accountants. We have engineers, CPAs, tax attorneys. We have corporate attorneys. We have a registered investment advisor who's not a financial planner. We write them a check, and then they do all the analysis, make sure people are protected, make sure that they discover what their real fees are, what other options they have. Because the problem is, if the investment advisor is just worried about managing money, then they're just going to peddle products like everyone else.
Yeah.
Then we have cash flow specialists, and the cash flow specialists, they specifically look at people's financial reports and kind of dive in and find out where they can find money. And then we have every type of insurance professional and their job is to be educators and analyze. And a lot of them don't even do the transaction. They just come in and look and make sure that people are doing the right things and it's all coordinated.
How big is that external network? How many people are in that?
Well, we have about 15 different firms that we work with, maybe 17 different firms that we work with. Not every client's going to see all of them because some might be on the more advanced side of things, or some, it's just an issue that client isn't facing based upon the type of business that they have. But there's probably 7 or 8 that everyone pretty much sees because it's the foundational pieces that everyone has to deal with.
Gotcha. And so do people pay your company directly for like the whole package, or do they consult with you and then pay all of these external people individually?
Yeah, we it's an invite only into our full program. So what happens is people might subscribe to our weekly publication, or they might subscribe to our Curriculum for Wealth video series, or they might subscribe to our Wealth Acceleration program where they come to one of our workshops. And with all of those things, they typically get a phone call where it's a cash flow overview. And then we even have online surveys and stuff that they do to figure out what's going on in their financial life. Based upon those conversations, that's where they get invited in. When they get invited in, because we're boutique when it comes to the one-on-one. We only take 125 people a year into that one-on-one type of circumstance, and we have to make sure we can put twice the amount of money back in their pocket than what they invested to join the program. And then after that, it's a much lower investment to continue to work with us. But everything's included other than two factors. Yes, the attorney looks at their existing corporate structure, their estate plan, educates them. But if they have to set up a new corporation or do a domestic asset protection trust, that would be extra, but they get a 25% discount through us simply because not everybody needs the same things. The accountant will look at the last 3 years' taxes, current year tax strategy. That's all included, education included. But if they file taxes, then they would pay for that. Otherwise, everything's completely inclusive. We used to include those two things, but it's just so different from person to person. Some people have 3 businesses. Some people have partnerships. Some people have awesome accountants. They're the 7% where everything's handled. We don't want them to pay extra if it wasn't something they need to pay extra for.
Gotcha. So what's kind of your ideal client? You said you want to put them through the ringer and really find the perfect client for you. What things do you look at? Do you look at revenue? Do you look at wealth?
Yeah, revenue. Our range is anywhere from $500,000 to $5 million on the revenue, and the majority of people are between $1 and $2.5 million on the revenue side. We love to see other factors. These are not musts, but if they're, they've got to have at least some investable assets so that we have some things to maneuver and work with. But it doesn't have to be a large amount, like 6 figures is all. It doesn't have to be in the 7-figure range. Love it if they're married. Love it if they have 1 kid at home. Love it if they have more than 1 loan. Love it if they own a building. But those are all on the peripheral. What really is most important to us is that we like who they are. We feel like they're very coachable. They have to be an entrepreneur. They're not going to retire within the next 2 years, because we want people that see retirement as something they do in their business, not that they do so they can go sit on a beach and throw rocks while we do all the hard work. We view this as a partnership, that it's a done with you, not done for you program. So that kind of gives you a sense of who we work with.
Yeah, nice. I love that. I mean, I think a lot of people, especially entrepreneurs, need a partner, need somebody to help guide them. I mean, just like you have a doctor or somebody that's going to, help you stay healthy so you can go through the long haul. Like, and I feel like a lot of entrepreneurs, like, especially like type A guys like me, like, we're stubborn sometimes and like, no, I got this, I can handle it. And then you don't realize how much shit's actually fallen to the wayside. And then you look back a year later and you go, oh my God, I could have optimized that, optimize that. So I love that. What would you say to, like, say somebody's watching this or listening to this on the podcast that they're like, well, I'm not quite at $500,000 or $1 million, and I'm working on building my wealth, but I don't have a lot yet. Are there any tips or strategies that you think could help somebody get to that level?
You bet. We have, if you go to wealthfactory.com, you can see on the front page, there's a free cash flow guide. If you go to the About Us section, there's 3 guides on that. One is what we call the investment scorecard, but there are other ones that are actually like cycle of creation, which helps people think about an idea and taking the idea to a concept where other people now understand it and are part of it, to a framework where other people are helping them build it, to a product, service, or experience where they can get paid for it. And a lot of it's extracting that kind of business side of things. Now, we have our, Curriculum for Wealth and some of our programs like Cash Flow Generator that we don't have, any safeguards on or gatekeeping on. It's just simply, if you can afford it and it's something we sell online, we let people in and we give them all the resource. See, the big programs are people that have a lot more money than they have time. The lower programs are people that have more time than money, or they need to figure out how to make more money. So they're so incentivized to go in and dive into our content. And that's how we plan on get to the 1 million people, is through the front end and just having that spread and having people share it. And that's why we have a lot of free content when people go to our website, and a lot of free resources that is stuff that we used to charge for back in the day, but we extracted out and said, here's something that we just feel is valuable enough that everybody should share it. Kind of like Mercedes owns the patent on the seatbelt. But if they didn't let other car manufacturers use the seatbelt or suit them, then they're just going to be less safe. So they just shared it for free. And I looked at that and I said, what's our seatbelt stuff? What's our stuff that we really created for people to pay, but start giving that away so we could build relationships and so that we can really help people get where they want to go, because we know there's a lot of people with a lot of potential, but they don't quite have our normal parameters yet. And we don't want to just say, good luck, hope you get there. We wanted to reach out and give them value.
Yeah, I love that. I'm looking at the guides right now, and we'll certainly link these up in the show notes. Is there one aspect of like the complete financial plan that you would say is like, you know, like 80-20 principle, right? Like what's one thing that most people could do today to start building more wealth, or at least to start, you know, keeping what they've already got or build towards the next level?
Well, I think Andrew Carnegie said it well. And I know you asked some of your guests this, so I'm giving you kind of an early answer to this, but Andrew Carnegie said, I put all my eggs in one basket and watch it like a hawk. And to me, the real road to wealth is focus instead of diversification. So focus and build like the Amazon River, multiple streams. Streams are small, they can dry up. You know, an Amazon River brings so much life all around it, and there's so much fresh water into the ocean because of the power of that flow. You focus on cash flow. And one of the people on my board, his name's Rich Christensen, wrote a book called Zigzag Principle. And in that he says, you know, when you start a business or when you're in the early stages, you don't have the revenues you want. He goes, you do everything you can to build cash flow. Don't worry about having, you know, scale yet. Don't worry about bringing all the resources that you need. You kind of begin lean and say, what's your, you know, minimum viable product? Get that, get people behind it. And I call it win, then play. Win, then play is even if you're launching something, you can pre-sell it at a lower price. Like when I did Killing Sacred Cows, my New York Times bestseller, people that bought it before it came out, I gave them bonuses and sold it at a lower price just to get that money in, to get that momentum in. And then it gets it excited. You know, you think the Super Bowl, when it happens, they sell the tickets before we even know who's in the game, you know, and they're doing everything they can to make it a great game first. So we got to have a mentality of win first, then play the game. Don't play not to lose. Don't even play to win. Win the game by how you structure it. Have people pay you, and then build it based upon the excitement and what they paid you, and have high integrity to deliver that or more. And that's the success rules in a business.
I love that. There's so many knowledge bombs in like that 1 or 2 minutes. So basically focus all your energy on the Amazon River. Don't dick around with a bunch of little streams. Focus on the big life force. And then what else? Win, then play. I think I kind of heard in there, like sales will cure all, like just get some cash flow, get some sales, right?
Yep. And if you're not, I mean, you just got to keep your eye on the ball with cash flow, and then build liquidity even when it's tough. As a business owner, pay yourself first, put some money in a separate account, because most businesses die because of a lack of liquidity, not even because they have a bad idea or they're run by bad people, which there's plenty of that out there. But the majority is simply because they didn't build up the safety, stability, and foundation. And so a lot of business owners redline. They spend optimism. They have a good month. They think it's always going to be that good. Instead, take and reserve and preserve some of that money so that when the right opportunity comes up, you can pounce on it. Or when a health challenge comes up, or a family member needs you, or you lose an employee, or there's embezzlement, or the economy changes, you can handle it because you have staying power. Far too many people in the financial world don't emphasize savings because you don't get paid on it. But the bottom line is savings creates a peace of mind fund. That peace of mind fund grows, it becomes an opportunity fund. That opportunity fund grows, and as you become a more successful business, it becomes a war chest, because you'll have a success tax at some time. A success tax is, if you don't hire us, you're going to find out one day a bigger tax bill than you expected. That's a success tax. Or you get sued simply because you have money and people want what you have, because there's a lot of moochers and looters out there. So you got to have a war chest for those kind of things. And you know what? 90% of the financial surprises people face could be planned for and alleviated. Not that the problem wouldn't exist, but they can handle it because they have the right infrastructure and foundation. And that's what we're just badass at doing, is protecting business owners, having them invest back in themselves, keep more of what they make, but make sure that they aren't going to be derailed so they can sustain through whatever unforeseen circumstance comes their way.
I like that idea of like thinking about all the possible things that could go wrong, and that a lot of times do go wrong, and then planning for them ahead. Yeah. You know, I see a lot of investors, especially like early stage startup guys or small businesses, that, you know, they want to have a little bit of money so they can feel good and buy cool shit. And like I think a lot of people put their priorities backwards. They want the big house, they want the nice car before they actually have a financial plan. And I like the different accounts that you said. The only one that I've really referred to it as is my FU account, money that, is there. So you don't have to make fear-based decisions because, when people get desperate and they're down to their last dollar,
they chase bad profits at that point.
Say it again.
That's when they chase bad profits.
Chasing yeah, exactly. And then you make fear-based decisions, you make stupid decisions, and then everything goes down the tubes. So I love that idea of just saving and then, making wise decisions for the long term and almost like doing a pre-mortem, right? Like looking at why something could die or what the problems could be. And then if you plan for them, you're not going to be surprised by them.
Yeah. Yep.
Awesome. So, Garrett, that's great stuff so far, man. Tell me a little bit like about the business side of what you built. How many clients do you have? What do the economics of that look like? What do you charge for the full package?
Well, our flagship financial program is called the Freedom Fast Track. It's a $25,000 investment. We have another program called the Business Fast Track, which is then we start diving more into the business side of things, look at business metrics and margins, team, all that kind of stuff, leadership and strategic initiative. That program is $22,000. It's usually year two. Sometimes people combine them. We have on the front end our weekly publication called Build, which allows us to reach a lot more people. And, that's getting to, tens of thousands of people. We just started that 51 weeks ago and, really just continue to gain momentum and ground on that. It's a one-time investment and then people have permanent access to that. We have our cash flow banking product that we just finished, which is, a couple $100. But what's cool is it teaches people how to rig the game in their favor around finances by cutting the bank out as the middleman, supercharge their savings, which is normally less than 1% taxable, to get it to 4 or 5% without taxes, and then have that become a fund that helps fund other investments and be one of the stops along the way. Then we have our Curriculum for Wealth, which is our step-by-step education system to achieve economic independence, which is primarily done through video with a little one-on-one support. Then our Wealth Acceleration packages, which are anything from cash flow generators at $1,000 to $3,000 that comes with our 3-day workshop, which are 3 or 4 phone calls, analyzing taxes, finding out where people are losing and leaking cash, and then what their overall view is of their entire financial picture, what's working, what's not working. So, that front end allows us to reach a whole lot of people. The back end, one year in 2010, we took 375 people in, way too many people for us. We didn't want to scale that because we want the caliber of people we have. We have guys that have been with us since 05, 07, 08, so we have long-term great employees that know what they're doing in a pretty dynamic field. But on that front end, that's how we can impact 1 million people. And then, really just on an annual basis, 125, maybe we'll grow that up to 200 people on the one-on-one side.
Nice. Yeah. So you go real wide with the front end stuff. And then as the funnel gets deeper and you identify who those like high end clients are that really need that service, that is like, I guess, kind of difficult to scale huge because you're doing it at such a high quality that you really need to make sure you have the right people, and that takes time, right?
Yeah, there's a book out there called The Discipline of Market Leaders. It's a little bit older book, but it basically talks about 3 types of business models. I really believe that there's 4. One business model is product superior. So product superior would be like Gucci or Virgin or Mercedes. We brought that up before. Those are like product superior. The name, you think of high quality when you think of product superior. Those are pretty tough businesses to build. Usually requires investing a lot of capital, raising a lot of capital, and it usually takes a long time to build that reputation. The second type is operational excellence. Operational excellence would be like McDonald's. Plug and play. Hire a new person, they can start tomorrow. The systems are there. Southwest Airlines is pretty operationally excellent. It doesn't require extraordinary individuals that just, to work on a lot of those positions. They just have it well documented of what to do. And the third type is customer intimacy, where you just can serve your clients best because you know the most about them. Harder to scale customer intimacy. It's possible, but we're more of a customer intimacy business on the back end. And the fourth type is path dominance. You go to a game, like a football game, you eat whatever is available because that's the only path that's there. You go to a hotel, you want to eat late at night, it's whatever's in the room that's $20, that's normally $2 somewhere else. So you could be 2 of those things, a dominant and a secondary, but you can't be 3 of those things and make it work. So we really looked at it like, hey, we're a customer intimate company. And to scale that, we're going to lose customer intimacy, and it would be impossible to scale it and be product superior, just because at that point we would lose touch with who the clients are. And, there's a lot of players in that game.
So you guys have really identified your niche, and it seems like you are product superior. That's great. And you have that intimacy with the high-end guys. All right, Garrett, now it's time for 5 to Thrive.
Okay.
5 questions are going to help people learn more about your business and you. Are you ready?
Yep.
All right. So what's one piece of advice that you'd give to a young entrepreneur that is looking at what you do and saying, I want to start a financial services business? Where would you say is a good place to start, or what's one piece of advice that could help them get started?
So what I would say is find out the most successful people that you know in that arena, and do whatever you can to shadow them or be around them, whether it's giving them internship type, whatever, for free, so you can be around them, whether it's, just supporting them in their business. I mean, I got super aggressive at going out there and getting educated, because I believe that you got to have the right mental capital. And then it's simply looking for the highest quality relationships that you can build value for. So you start building up that database of relationships.
Nice. I love it. So you already answered the second question, which is you are all in. You're the Amazon River. I love that analogy of just focusing on one thing and growing it big, and then maybe delegating everything else. What book would you say is required reading for entrepreneurs or investors?
Required reading for an entrepreneur is Atlas Shrugged by Ayn Rand, because you get it what it means to be an entrepreneur as you read that book, and the trials and tribulations they face, and the turmoil, and the way that other people don't see the world the same. So I think that's pretty critical. And then in addition to that, I think Give and Take by Adam Grant.
Give and Take. Okay, yep. Nice. I haven't read that one. I've read Atlas Shrugged, but not Give and Take. Got to get that. Nice. Garrett, do you have a favorite quote or a mantra that kind of guides your life or that you live by?
Yeah, Benjamin Franklin said, wealth is not the man that has it, but the man that lives it. So I live the mantra that I want to live wealthy all along the way, that someday is never going to come. So it's all about, how do I prepare for the worst but live for the best? And that's really how I live.
Nice. And that leads right into our last question, which is, what does true wealth mean to you?
So true wealth to me comes in 5 tracks. Like, some people say money's not important. They usually don't have much of it. I look at money like air. When there's not enough of it, it's pretty damn suffocating. So money's part of it in finance, but also soul purpose, which is our values, our passions, our abilities combined for a vision that's worthy of our life. Soul purpose is at the core deeply who we are. And we're either congruent and live that and express it properly, or we're incongruent and we suffer. The third thing is mindset, because there's 2 determinant mindsets out there. One is scarcity, which is fear, lack, doubt, worry. The other is abundance, which is human ingenuity, innovation, production, profitability. So to me, mindset's a part of true wealth. Then it's health, right? Our physical well-being. If someone doesn't have that, it's like someone with good health. The proverb is, you have millions of dreams. Someone without their health has but one dream, right? And that's to get their health back. So, and then the 5th one is social, which is friends, family, relationships, experiences. So to me, true wealth comes in 5 tracks: financial, soul purpose, mental, physical, and social. If you don't have all 5, they'll bleed over, and it'll start to impact your life either through the feeling of guilt, worry, feeling like you're out of harmony, all that kind of stuff. And so true wealth is all 5 tracks.
Garrett, I got to say, man, that's probably the best damn answer I've ever heard to that question. You nailed that, man. That is like just perfect. It's all encompassing. The one question that I have is, I hear a lot of people say, well, Chris, like, I don't know my passion. I don't know my purpose. I don't know what I should be doing. Do you have any advice or suggestions for people that are maybe unclear on what that is?
Yeah, I have a lot of suggestions and advice around that. One is, like, take time to start thinking. Take time and start paying for people to mentor you in that arena. It's worth figuring it out and uncovering it. To me, it can't just be about passion. It's got to be passion combined with ability. I've seen people that have passion without business wherewithal that are getting bitter and broke right now. So simply, you have to start inquiring and asking the right questions. I mean, hell, if people just subscribe to our weekly publication, every 5th issue has worksheets and things for people to discover what that is. But if you look back in your life, What do you find yourself consistently talking about? What are the most painful experiences that now you're very passionate about, never having someone else experience that pain? You know, what types of things are you reading regularly, or would you do whether you got paid or not? You know, what types of things do people compliment you on all the time because it tends to come more naturally or feels more natural in your arena? So it's simply, as you inquire and ask those questions, you start to discover that. And to me, in today's world, there's no excuse for that. Passion's like a fuel. It helps you get further. But without ability, passion can just feel like, you know, things coming apart at the seams because you want to see it happen, but you can't see it happen because you don't have the ability. You got to combine the two factors in order to have real sustainable, true wealth.
Yeah, I mean, there's a lot of people that would love to be a professional athlete and they're passionate about that, but they're, 5'2" and 120 pounds. Like, that's just not going to happen. So
right.
I agree. I mean, you've got to find.
Yes, they could be a jockey. Maybe they could be ride horses. Maybe they just got to change the picture, right?
That's right. That's right. You just got to find the right niche.
Yeah.
Well, I love it, man. Garrett, thank you for all those knowledge bombs, man. That was some really good stuff. I love your philosophy on true wealth. I love your philosophy on, just getting your financial house in order, and, how entrepreneurship and, financial prosperity, they do go hand in hand. But, I see time and time again, entrepreneurs that just don't do that the right way. And you guys have got that figured out. So we're certainly going to link up, your site and anything else that you want in the show notes. Do you have any final words of advice or wisdom for entrepreneurs, investors, traders, or innovators?
If you don't have a financial team, you will pay the price. If you have the right financial team that are A-teamers, they will be, 5,200% more productive for you in your financial life. That's according to a study that IBM did. 5,200% principle of having A-teamers. It's worth investing in the right team. They're going to protect you. They'll save your butt in difficult times and making sure you do things right, and especially when you get caught up emotionally in things. So that's the next investment for these people that are watching, is get that team. Don't have any holes in it, and make sure that team communicates with one another. And all of a sudden you're going to get access to the same thing the ultra wealthy has always had access to, that allows them to perpetuate wealth from generation to generation.
I love it, man. It's a great place to leave it off. Garrett, thank you so much for being on the show, man.
Thanks, Chris. Have a good one, man.
All right, you too.